Hi, welcome to the Market Alert for Tuesday the 4th of July 2017. Now, I said I wasn't going to record one today, but after yesterday's market activity and then looking at the implied volatility, I thought I'd just better alert you to a couple of things that are going on. So hence this recording. So yesterday we saw the market move higher. No surprise, I said in the Market Alert that the Dow will move higher if nobody's selling into it, and that's precisely what we saw. And we also see the market putting in a new all-time high. Now, the market didn't trade for the whole session. It concluded just around about here, which was late afternoon, half session yesterday, which I'm surprised by, but it appears to be the case. And then in the daily chart, you can see that we've got the new all-time high at 21,564. Just delete these lines and just put this back in on the all-time high there. Now, what was interesting about this yesterday is that, as I said in the note I sent out, if the market gets to 21,500, then watch out, because there'll be some resistance and the market could trade sideways. Well, it didn't trade sideways, it actually came back. As you can see there, it actually more or less pulled back everything that it had actually taken on the upside. Now, that means there's some weakness around in this market, and a lot of traders didn't want to hold the position over the Independence Day celebrations either. So that's why you're seeing prices return and pull back before the close of yesterday. So back to the bigger picture, we have an interesting setup here. We've got the market stuck in this range, and more importantly, if we go to the implied volatility, you will see that yesterday this actually increased, where you would think that there would be a decrease, and went from 8.67 to 9, and 9 is the resistance area that we saw at the beginning of June. Now, given that the market is very, very overvalued in the top, this sideways churning motion, it's highly likely that we're going to see some form of correction coming into this market. We do have the non-farm payroll figures on Friday, but this market is desperate for some sort of correction, clean out, and the implied volatility is indicating this to be the case as well. Of course, they want the market on the highs. They want to keep it on the highs as long as they can, which is why we saw what we saw yesterday. I've been barking on about this for weeks, if not months, if not years. And we've got a situation where at some point it has to give, and it's starting to look that way. This increase in the implied volatility when the market made a new high, I wouldn't say was unprecedented, but it's strange to see that the market has actually started to price up the option volatility in anticipation, as you would interpret, for a potential down move. So that's how I see things with regards to this. Let's have a look at the pound for yesterday. The pound put in a sell signal yesterday, saw prices moving lower. As I always say, if you make profits on the first trade, you don't need to worry about the second one, because in the pound you tend to get the move over and done within the first couple of hours, and then the market will trade sideways, just as it did yesterday. You can see there sideways, and of course going through the night where the US are going to be closed, you also see a continuation of the sideways range bound market there. A potential sell signal there at the moment, but I wouldn't expect too much today, and I'll certainly stand aside. I can't see too much of a reason to be at the desk trading, because there is the pound maybe this morning, but it'll have to increase the volatility levels from what we've got here at the moment. There's barely anything moving this market, as you can see. You know, this is 50 points between the blue and red line, and we haven't got a whole lot of movement there at the moment. Maximum 25 points in range. So we'll see how things pan out there, but certainly the Dow will be quiet. Of course, there will be the electronic session, but I would, again, it's Tuesday, all the news is factored in. If it's going to go one way, it'll go to the upside generally, because that's, as you saw yesterday, when the market participation is lower, then you get the market moving in one direction, no resistance, no selling coming in, and allows prices to move higher there. Right, that'll do it. Just wanted to give you a quick update as to where we are in the market, and I will report in on Thursday. Again, keep in mind that the fact that the implied volatility has ticked up a bit here, even though the market's put in a new all-time high, and that to me is a bit of a, I wouldn't say alarm bells, but a bit of a warning sign that things possibly could be on the change here. Right, that's it. As ever, thanks for watching. See you in the next one.